Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
What are your thoughts on the seasonality of VIX?
Consistent, very, very consistent, and I wouldn't be surprised if that repeats. Now, a sort of slight increase in the VIX may not come with a sort of corresponding crash of any kind, but I do believe that probably will hold that seasonality. And then there was another one that actually you pointed out as well today, which I wanted to show as well, which was, let me grab this. I wanted to show the seasonality. Remember you showed me that chart on seasonality and volatility as it pertains to earnings. So let's take a look here. We've got typically, if you average out earnings seasons, so we've got a number of them per year. If you average them out, we see that starting at the beginning, we tend to see a drop in volatility for a couple of weeks, and then it starts to edge up a little bit over the next few weeks. January tends to be a little bit different. We get a little bit of a pullback in volatility off those first few reports, and then we start to pick up. And so maybe this is part and parcel of what you're showing, Samantha, which is really just kind of a general rise in the VIX, rise in nervousness into the first few months of the year, which, to be honest, tend to be okay months though, right? They tend to be okay. Last year we did okay until about March, April. We had a little dipsy doodle in there, but
that was also macro.
That was macro as well, but it also depends on the results, right? We're going to be watching big tech very carefully. So
you know me, I'm much more focused on, unless the option flow is bullish, we need a macro trigger to interrupt it. Whenever we get a macro trigger to interrupt it, then the market succumbs to weakness. Breadth breaks down underneath the surface. Since December 2nd, it creates an air pocket of risk. And so we had that 3% down day on, I think it was December 18th, right, with SPX, which doesn't happen very often. So, and then we had the green shoots on December 20th, which was that Friday. We always kind of run with these option, they end at the week or the month or the quarter. So anyway, long story short, that was the bottom for December. And now we have just been chopping violently. We filled finally, after 2 months of big picture going sideways and big wide swaths, we fill the election gap. Now, the power of this bounce that we've had Monday, calm Tuesday, strong Wednesday on the 5 reasons that I've outlined, mostly has to do with falling dollar in yields, not CPI, not even the algos. A lot of the hedge puts that were added yesterday that had to unwind, no question. Structurally speaking, we've talked about this, right? Tail on the dog. No, it is the dog. So flea on the tail of the dog. It is now. Options is the dog. But it is really because we had that big bounce in bonds and yen, which caused dollar and yields to soften and give that whoosh, short covering reason to cover. So I just think we're still going to have to focus on the macro for the absolute timing of these ins and outs, of whether it's daily or weekly or monthly. And right now we're waiting to see what will policies really dictate from the administration, the new administration, especially Trump tariffs and tax cuts and Treasury. But earnings typically doesn't move the market. It might move a stock, which moves a sector, but we don't really have a directional move in the market one way or the other during an earnings season. It pretty much just hangs in there, right? That volatility, I don't even know what you want to call it, clench. And then once we're free of earnings, then we have a directional move of size. That's what I have anyway noticed just from a pattern standpoint.
We're in that. That's funny. We're in the clenching. We're still in the there was a little bit of unclenching going on today, but we're going to be in the clench for earnings season. And of course, volatility will rise into earnings season because that's what option pricing does. It gets a little nervous into those events.
Well, the realized fall that you showed from that spot gamma chart, absolutely. So I didn't want to interrupt you, but I just keep going. For me, it's a macro trigger that interrupts the option bullish bent.
Yeah. And that's where I think it's important for people to understand, because we often, as option traders, we sort of look at, well, where's the realized vol? Where's the implied volatility? So if implied is higher than realized, meaning if option pricing, if the cost of insurance is much, much higher than the underlying risk, then we call that a positive carry. We call that a positive volatility risk premium. And in theory, you should be able to capture that by selling volatility, by selling options. And that's what we're really trying to do as option sellers. If that's your jam, is you're trying to really capture that vol risk premium over time. Now, the problem with that game is it seems easier than it is. You have the strike risk. And so for me, direction of volatility is very, very important. So I tell people, so I started adding a little bit of risk today. I wasn't really adding at 5,800. And so somebody might say, well, Hans, what are you doing? You could have bought the market lower. And I say, well, it's about recognizing where there is more risk. So if we're, down around 5,800, we're in a very potentially volatile powder keg kind of environment where if we start to push down 150 points, we could be in real trouble. So I'm very much of the opinion.
That is a very important caveat. So as you were talking about this inflection point, okay, sure, we can have a nice Vanna rally, this nice bounce off the election gap fill. But we can also revisit it and take it out to the downside and head back down to 5670 area, which is a risk. So, this is basically why we're looking in at shorter time frames, but we definitely had dollar and yield moving very strongly with energy pricing, which is going to, by the way, be a headwind for earnings next quarter. Long story short, there was reason to be cautious. There was reason to make sure it is safe. And honestly, this 90% up day is not a surprise to me. It won't be a surprise when we have a 90% down day in the next week, and then we retest. And then we'll see if the bulls are really brave enough to come in and bid it up, like you just said, that 5,800, whatever level, 5,850, and we'll see if they really, really want to take it higher.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.